Meanwhile, the Absa Purchasing Managers Index has shown a modest improvement in manufacturing sentiment. This despite the sector remaining in contractionary territory for the fifth consecutive month. Weak readings in January and February have resulted in a first quarter average of just 46.2 points, down from 49 points in the last quarter of 2024. Absa CIB's economist Andiswa Nondudule joins us now to unpack the print in greater detail. Thank you so much for your time, Andy. So I do understand that there was improvement in the PMI in March, but still in contractionary territory and actually not even hovering anywhere around that 50-point mark. What's actually been the major pressure points here?
I think for quite some time now, we've been seeing a downward pressure on demand, which has obviously affected activity levels. So that has been the main sort of dragging factor for the manufacturing sector. But yes, as you said, had a print that improved in March, but it still remained below the 50, which is a bit disappointing. But I think if you look at the underlying data, we saw meaningful improvements in both business activity sub-index and the new sales orders sub-index, even though they also remained below the 50 neutral mark.
And when you talk about demand, you mean domestic demand, right? Because I do see that there was a turnaround in export sales.
Yes, so for the first time in about 4 months, we saw an improvement in export sales, meaning that we are starting to see some improvement in external demand.
I'm actually wondering now, with the Trump tariffs coming into effect tomorrow, as they say, Liberation Day is tomorrow. I'm wondering if that could create a little bit of a stumbling block, considering the trade relationship that we have with the U.S.
Yeah, so it's difficult to quantify in terms of how that's going to translate into numbers. But obviously, the U.S. is a major trading partner of South Africa. So whatever happens from the tariff front does affect South Africa. But in terms of how much that will affect growth as a whole, or the manufacturing sector in particular, it still remains unclear.
It's also quite interesting that we have seen some momentum in export sales. And I mean, we know that a big headwind for that has been the challenges at Transnet, our logistical kind of blockages there. And I'm wondering how things are looking. Does this signal that things are better, or that things are getting better on that logistics landscape?
I think in terms of logistics, we have seen an improvement, but I think there's still those stumbling blocks. Some of the respondents with the PMI did note that they are still experiencing some of those logistical constraints.
All right, let's take a look at the supplier deliveries index that decreased slightly. What is that behind that improvement?
So what we think, it's an inverse, right? So a decline in this index means that supplier delivery times sort of shortened. And I think if it would have been a good thing if we saw a massive improvement in activity. So that would mean maybe there's activity. But I think we can probably tie it to the fact that there's still some logistical constraints there.
And I mean, as we're talking about suppliers, of course, we have to talk about input costs and inflation there. I see that that also decreased. Are things looking good from that perspective, particularly looking at where our currency is at the moment?
Yes, so we've had a relatively stronger rand in the previous few months, which has supported input cost pressures. But I think going forward, the 12.7% increase in electricity tariffs for direct Eskom customers kicks in today. So for the next survey, we're likely to see a bit of upward momentum in that index.
Employment, the employment index, is this one even to be dissected at this point? Because I do note that there was an improvement, but that still does remain in contractionary territory. Can we just expect that at least for the next short to medium term?
I think this one has been a very disappointing one.
Yeah.
It's been below 50 for 12 consecutive months now. So for about a full year, below 50. So I think what manufacturers are looking to see is sort of a sustained improvement in activity levels before they can sort of invest in employment.
I'm quite surprised with the expected business conditions deteriorating further, because I would think that the economic landscape lends itself to supporting consumers and domestic demand. Is that maybe because there's a lag effect, and that maybe we can't expect a real growth in demand until all these things, lower interest rates and the like, really filter through to the system?
Yeah, I think what you've said is correct, but I think what is likely driving that sort of less optimism from the firms is mostly the external environment. There's a lot of volatility from that front, and I think there's all these talks about trade wars. So that uncertainty in the global environment is likely what's causing manufacturers to be somewhat less optimistic about business conditions in the future.
Does this also signal, because I mean, we mentioned the kind of softened PMIs in January and February, and now even though there is an improvement in March, that's still in contractionary territory. Are there any signals for GDP growth in the first quarter, in a year when there have been forecasts that GDP growth for 2024 is expected to be triple that of what we saw in 2025, triple of that that we saw in 2024?
Yeah, so in terms of, I think I'll just touch on the manufacturing sector specifically. I think what the PMI is suggesting is that we are unlikely to see sort of a meaningful rebound in the sector for Q1. In terms of GDP growth as a whole, we are expecting about modest growth of about 0.5% for Q1.
Yeah.
For the year as a whole, we are a bit on the optimistic side at 2.1, but we think that's likely to be driven by the consumer. As you've mentioned, that we have had easing interest rates, inflation has been slowing. So a combination of those factors is likely to sort of drive the consumer, and also think that there's likely to be a pickup in investment as well. So in terms of GDP growth, we're also thinking that the more electricity intensive sectors are likely to sort of benefit from the stable electricity environment that we've seen in the past year or so.
All right. And of course, manufacturing being one of those. So it's going to be quite interesting to see what we get out of quarter two. Thank you so much for your time and for your insights there, Andy. So that was Andiswa Nondudule, economist at Absa CIB.